Welcome to the day 2 of the Wall Street crossover show. The date is the 21st of April. It's brought to you by Tip TV in conjunction with our sponsors Admiral Markets, and it gives me a great pleasure as always to introduce Mr. Darren Sinden, the market commentator at Admiral Markets. How the devil are you, Darren?
Well, another lovely spring day, Moose.
It's beautiful out there, isn't it?
Fine form, thank you very much.
Is there any chance of us actually seeing the sun? Or
Possibly not.
It's a funny old world. Okay, so welcome to the show. This is day 2. We're streaming in real time. It's on the Tip TV website. It'll be on the Admiral Markets website going forward. Tell your friends. We've done a gentle launch, haven't we?
We have, yeah.
Just in case we make any clerical errors, but I'm sure that we'll get into the speed of things. So to reiterate, it's a crossover show. Basically, we cover the FTSE movers, data released in the European sessions, M&A, US data points, and pre-market movers and shakers. Right, let's go, Darren, to the first slide. Data released over the European session. What's going on in Europe this morning?
Okay, well, we got the influential ZEW survey data out this morning. Usually, people think of Germany when they think about the ZEW numbers, and there are a couple of key surveys here. The survey takes in the views of 350 financial analysts, and they're asked questions about what they think is going on in the economy right now, what's going to happen in the future, and it's a read of positive or negative sentiment. So for investor expectations looking forward, rather surprisingly,
it's a miss.
There's a dip. Yeah, 55.3 was the consensus estimate for the survey for that, and it came in at 53.5, and everyone's scratching their head really to sort of think why that should be. It's even more surprising when you consider that the current situation, where people are questioning about what they think is going on now, coming in with a massive beat of 70.2 versus estimates of around 53.3 again. So people are very upbeat about the situation right
now, but in the future,
not so upbeat looking forward. What confused the picture slightly more is that when you look down to the survey for the wider Eurozone, that also showed an expectation of an improvement going forward. So there's a bit of a juxtaposition there between.
Sounds like a two-way market to me.
It does, and it's maybe just one of those things that you get now and again, and perhaps we'll have to wait till next month to see, if those
some clarity
are included. The other key thing to point out today is this comment or suggestion that the ECB might be looking at tightening the rules on its emergency lending to Greece. I'm not sure what that would actually achieve. Greece is already backed into a corner, but there is some suggestion that they could, sharply hike the haircut that they place on collateral that's pledged to the banks by Greek banks in turn, and that the ECB lends money on. So just basically making it even harder for Greek banks to access money if that were to be the case. So another twist in the plot. Absolutely.
Okay, so let's move on to the FTSE movers and shakers. ARM, Sky, AB Foods. What are the headlines there?
Well, some good news from sort of tech and media type companies. ARM Holdings are obviously best known as a chipset designer, not a manufacturer, but somebody who does the architecture for chips. Their chips are in most modern devices, and particularly in modern cell phones. And it's cell phone demand that's really driven ARM's profits, and they posted. You can see 85 million for Q1 2015 versus profits.
So a good beat on the headline.
Yeah, so if you do that numerically, 30% effectively beat over Q1 2014, and the currency moves are in their favour because ARM earns its revenues in dollars. A strong dollar, of course, means it's you're talking repatriating that money back into sterling terms. It's doing really well. Also doing really well, Sky. Now, of course, you'll remember that there was a few question marks asked about how much they'd paid for the ongoing Premier
Football
League.
rights.
5 billion was considered to be too much money by some. However, they've confounded their critics. They've shown strong customer growth, customer numbers up by as much as 70% on some metrics, and more importantly than that, perhaps less churn. So not only are more people signing up to Sky, they're sticking around for longer, not cancelling. Operating profits on that basis up 20%. The stock up the best part of 4%. Not everyone thinks it's great news. Investec are saying take your profits here. But I think on balance, you'll see mostly positive comment from the brokers.
There's a theme we're looking at consolidation potentially in that sector this year, as been suggested by some pundits.
Well, that's also possibly true, and of course, that headline number will have not gone unnoticed in perhaps a potential
in the world of
stalking
Vivendi,
horses.
for example.
Yeah, perhaps.
AB Foods negative, down 2.5%. The
Yeah.
market's got that right in terms of my favourite place, Primark.
Well, I think the truth is AB Foods could be considered almost a victim of its own success. It's it's delivered consistent growth particularly through Primark. This time round, the sugar business has basically stalled. The numbers are still in line pretty much with analyst forecasts, but it didn't exceed, it didn't excite, and when you are on a sort of priced as a growth business, as AB Foods effectively is because of Primark, it's very easy to disappoint. And I think to some extent in this one it's been better to travel than to arrive.
Right. Just in the headline of that, I saw AB Foods talking about Primark going into the US, okay? And again, we know what happens when British companies, PLC, try and go overseas.
It doesn't usually work out though.
Right, let's move on to the next slide. M&A, rumours and movers. I see the hotel chain. This is an old one. This is when we were young men, wasn't it?
Well, I mean, it's always being talked about, but Intercontinental Hotels have been in the press again recently. They've been linked with Starwood Resorts, which is the ticker HOT in the US. Suggestion that there could be a merger. They're quite similar looking companies, to be honest. IHG trades on something of a premium to Starwood. IHG trading on 26 times earnings. Starwood trades on a P of around 23.7 times. Starwood's slightly bigger, worth about £9.5 billion as far as market cap's concerned, or $14.2 billion against the market cap of IHG of around 6.6 billion. The thing that might drive this actually,
the activists.
Exactly, not necessarily the management boards, but they're activists in the States, very keen for Starwood to do a deal, and there's talk that there's also pressure here in the UK and IHG to try and do something. So keep your eyes posted.
On the watch list.
Yeah.
Okay, so in terms of the US data points to keep an eye on today, a quiet session for the US?
Yeah, I think we've had two of the quietest days for US data in a row, but today there is something worth looking at. It's called the Red Book. Americans love the Red Book. We've got the Beige Book. The Red Book basically today is a composite of US chain store sales. It's probably best viewed on the year-on-year indicator rather than the month-on-month figure. So year-on-year, we're looking for a read of plus 1.1%. The month-on-month forecast, a small growth of 0.2%. What it gives you a clue as I suppose, is to consumer sentiment. And consumers make up 2/3 of the US economy, so it's some sort of a guide to that. But in reality, it only accounts for about 10% of retail sales, so don't read too much into it. But what we have got is a tremendous amount of earnings
140.
today. Yeah,
that's a busy day.
It is. It's probably far too many for any one person to keep a track of. Key or some of the key numbers are coming from Broadcom, chip maker, Chipotle. Is a casual dining stock. Yahoo, of course, we knew as a search engine and multimedia business that's coming after ours. Yum Brands, another casual diner, and two big names from the defence industry, Lockheed Martin and United Technologies, also reporting. But as I say, there's plenty more of that.
Plenty to get your teeth into. Okay, so in terms of the pre-market movers in the US and the levels, quick whiz through these, please.
Well, in talk of more M&A, actually, a news story doing the rounds this morning suggesting that Teva Pharmaceutical might launch a bid for rival Mylan. Of course, it's the pharmaceuticals and biotech stocks that have driven the US market predominantly for the last 18 months to 2 years. Mylan might not be a household name, but it's not an insignificant company. It's worth $33 billion. Bloomberg seems certain that there's something going on and that the news could come today. In terms of levels to watch in the markets, if we look at the S&P, we should be looking up to 2120 as potential resistance breakout. In the Dow, 18,169 and 18,205 are recent highs, and look for a move there. As far as the currencies are concerned, we're looking on the downside in euro dollar today. 106.20 could be a downside break. In dollar yen, watch 118.15 on the downside, or 120.10 on the upside.
Sounds like a trading range.
Well, I think that's probably what the hint is really.
Yeah.
The Aussie dollar 78 even is the upside level, and in cable, as we get closer to the election, we're likely to stay range bound. So 148.45 to the downside, 149.05 is the upside level. As ever, these are not this is not advice, but it is just level.
Just level chart points.
Yeah, exactly.
Understood. Okay, Darren Sinden, market commentator, Admiral Markets, day 2 Wall Street crossover show wrapped up. If there's anything you think you can potentially add to the show, we want to hear, don't we?
Please do, yeah.
Give Darren some questions maybe going forward. Right, that wraps us up. We'll see you same time tomorrow. Thank you.